Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DATANG Power interim report. Dating International Power Generation Co., Limited, offers a diverse range of businesses and services, including power generation through various sources such as coal-fired, thermal, hydro, wind, nuclear, and solar import of power, and related fuel production and sale of alumina cargo shipping sales of coal ash and integrated application of solid wastes, wholesale of coal power and heat trading. Dating Power's stock price has increased by 43.51% over the past year due to several positive factors. The company's strong financial performance in HON 2025, driven by a decrease in coal prices and growth in installed capacity, was highlighted in a research report from Huayuan Securities. Additionally, Dating International Power Generation achieved exceptional net profit growth of over 100% year-on-year in the first half of 2024, primarily due to declining fuel prices and an increase in new energy installed capacity. The company's significant new energy project development, with a total approved capacity exceeding 4,000 megawatts and a total construction capacity exceeding 6,000 megawatts, indicates strong growth in its clean energy portfolio. Improved power output, with a 13% boost in the first quarter of 2024, also contributed to the stock price increase. Positive analyst outlooks and favorable policies, such as direct green electricity charging policies, are expected to further support Dating Power's earnings momentum in 2025. The company's strategic initiatives, including acquisitions and bond issuances, have also positively impacted its stock price. Overall, these factors have contributed to the significant rise in Dating Power's stock price over the past year. The primary drivers of revenue growth or decline in a company can be attributed to several key factors. On the growth side, significant increases in total profit before tax, 37.92% and 43.72%, and net profit attributable to equity holders, 50.3%, indicate a strong financial performance. Additionally, operating revenue has seen substantial growth, plus 2.8%, plus 6.3%, and plus 77.25%, driven by increased sales of electricity and heat supply, plus 6.3%. New revenue streams from partnerships with China Dating Corporation Hong Kong Company, Limited, and Dating Commercial Factoring Company Limited have also contributed to the growth. On the decline side, a decrease in operating revenue, minus 1.93% and minus 2.71%, and revenue from electricity sales, minus 2.71%, indicate a slowdown in key areas. However, a significant decrease in fuel for power and heat generation costs, minus 12.9%, and depreciation, minus 6.3%, suggest cost-saving measures that have had a positive impact on the company's bottom line. Furthermore, a decline in procurement of production and infrastructure materials and auxiliary services with China Dating Group International Trade Company, Limited, by 80%, may indicate a shift towards more efficient supply chain management. The company's financial performance indicates a mixed picture regarding its ability to generate positive operating cash flow. On one hand, multiple pages, 22, 26, 40, and 47, confirm that the company is indeed producing positive operating cash flow, with notable figures of RMB 15,563,615 in 2025 and RMB 11,130,036 in 2024 from net cash generated from operating activities. However, a conflicting statement on page 27 suggests that the company's current liabilities outweigh its assets, potentially hindering its ability to generate positive operating cash flow. This discrepancy warrants further investigation into the company's financials to clarify its true operating cash flow situation. Has the company's debt level or interest expenses changed significantly? The company's financial summary reveals a mixed picture regarding its debt level and interest expenses. While total liabilities decreased by RMB 7,301 million, non-current liabilities, including debt levels, increased from RMB 24,452,706 to RMB 25,086,665. This indicates that although the overall debt has decreased, the company's long-term debt obligations have actually risen. In terms of interest expenses, finance costs decreased by approximately RMB 385 million, 14.52%, and interest on bank loans, bonds, and other borrowings also saw a significant decrease of RMB 336,574. However, interest paid increased from RMB 3,329,654 to RMB 3,212,214, resulting in a net decrease of RM 117,440. Overall, the company's debt level has not changed significantly, with both increases and decreases observed across different categories. Interest expenses have also seen some fluctuations, but overall, they appear to be trending downward. The company's financial performance reveals a stark contrast between its power and heat generation segment and the rest. The power and heat generation segment stood out as a strong performer, with significant revenue growth and substantial profits. In contrast, other segments struggled to match this success, posting lower revenues and meager profits. Specifically, these segments saw their revenues stagnate at around 3 million RMB, while their profit margins remained relatively low. This disparity highlights the company's reliance on its power and heat generation segment for financial stability. Management is outlining a comprehensive strategy for the company's future development. By 2025, they aim to transform into a state-owned capital, an enterprise with an expanded scale, driven by growth in strategic emerging industries centered on new energy sources. Additionally, traditional industries will be upgraded, and low-carbon and clean energy capacity will reach 40.87%. This multifaceted approach positions the company for long-term success and sustainability. The company has a history of paying dividends to its owners. In fact, it has paid out RMB 138,800 in dividends, as recorded on page 24 of the financial summary. Additionally, the company has declared dividends, with an amount of RMB 1,149,267 declared on page 25. This indicates that the company is committed to returning value to its shareholders through dividend payments. However, it's worth noting that the company has not bought back any shares, as stated on page 3 of the financial summary. That concludes the financial summary for DATANG Power. Feel free to comment below, and I will be happy to answer them when possible.